Welcome to Fintalk, a podcast organized by Alan Cuschieri. This is our third pilot today, and I have with me Alex Cuschieri, founder of Alan Cuschieri, and Jordan Portelli, our Chief Investment Officer. And today, of course, is a perfect day for a podcast about the markets because there's a lot going on. The US elections just concluded with a very strong mandate for Trump, and there's a lot of change coming along in the US markets. So I wanted to start by asking about, how did the markets react, and what are the expectations for the market going forward?
Yeah, so you've mentioned the result. I think, despite that polls were indicating a very, very tight race, it comes to the surprise of many that, as you've said, Trump was given a very, very strong mandate. In fact, the 270 majority required to be elected as president was actually more than exceeded in terms of expectations with 312 seats there. So it was, as I said, a very strong mandate. As expected, markets reacted positively, but specifically there were sectors which were more aligned to the Trump pre-electoral promises. So those were the sectors that performed very well, amongst which we've seen banks that did very, very well, and in fact the sector on average rallied over 3%. We had specific banks such as Wells Fargo, Bank of America, JP Morgan, Goldman Sachs. All these names were up on the day 13%. So this is where, as I've said, the pre-electoral promises of, in case of banks, less regulation, for banks, has prompted a very strong rally in these sectors. Industrials benefited as well. So we've seen names such as Caterpillar, which was up also 8%. We've seen also the energy sector, the likes of Chevron, ConocoPhillips and ExxonMobil also gaining strongly on the back again of what Trump has promised to implement in the course of his term in the next 4 years. So overall, as I've said, it was a very strong rally on the day. We've seen also different names which were impacted negatively also on the back of possibly tighter regulation there with the Trump administration. And again, from a regional point of view, Europe standed to lose on the day, obviously, because we know that eventually we might also be faced with uncertainties due to the expected tariffs which should be imposed in the coming months.
So in terms of sectors which benefited and which rallied, and also an outlook on the sectors under this administration which are set to gain the most, where is positive and where is negative, apart from the financials? Can you give us maybe a bit more examples on where you think, for example, if you look at Tesla, not sectorial, but Tesla specifically, it rallied substantially. That was more stock specific, I would say.
It was stock specific on the back that we know that Elon Musk donated over 100 million for Trump's campaign. So this comes to no surprise. There are rumors that actually Elon Musk will have a formal position in Trump's administration going forward. I don't know if it's a good thing or a bad thing. But again, it was specific given, obviously, Elon Musk and his ties with Trump. So that was expected. And even the sectors that I mentioned earlier were expected to do well, depending on the election outcome. And as it happened, Trump did win with a strong mandate, as we've said. So these sectors did well. But as I've said, then there were specific names or sectors which did better than, for example, financials. You've mentioned Tesla as a name. On the day, Tesla was up 14.8%, and it continues to do well over the course of the past days. And then, as I've said, there were other investments which also eventually did well, but should also continue to do well if Trump keeps his promises in terms of enacting legislation for these particular sectors.
So to summarize, we're talking about financials that could possibly be
financials, energy, industries, okay, and financials, not necessarily banks. This is very important to point out because many people think that it's all about banks, but it's more than that. So, for example, even in our portfolios, we started looking at other sectors at other names within the financials. For example, BlackRock is one of them. S&P Global is another one. Fiserv, which is a very small company competitor to Visa and MasterCard. These are all names that stand to benefit with eventually this administration.
Okay, interesting.
No, what I wanted to add to what Jordan has done is that during his long campaign, President-elect Trump has had a very clear economic vision. And the main aim of the economic vision was to drive U.S. growth to new heights through reduced regulations, less bureaucracy, tax reforms, and a business-friendly approach. Obviously, coming from a businessman, a business-friendly approach, he approaches this in a way he's running the country as if he's running a business. This, I think, is important because it's amazing how pre-election fear was replaced with the fear of missing out in the space of a day. It is amazing. And now this gives the opportunity for investors to shift their focus, take a good look at their portfolio, see the market sector that are likely to benefit. Jordan mentioned quite a few good names. Caterpillar is one of them. I was going to mention it. Tesla, not quite sure. Obviously, Elon Musk will benefit from his support to the Republican Party by building more mega factories in the US. We'll have to watch out whether that relationship will thrive or whether it will sour. It has happened before, so we have to be very, very, very careful.
Yeah, there's a lot of enthusiasm at the moment in America, to change things.
There's a lot of enthusiasm, but quality investors, not momentum investors, but quality investors should be wary of the valuations of Tesla and the core business. And this is something that has happened between the promises that were made and the actual implementation of those promises. It's not going to be easy, but
I'm not talking about Tesla specifically, but in the US market at the moment, there's renewed enthusiasm.
There's renewed enthusiasm, and it will create a boom.
On the economy as well.
I think we'll touch on the inflationary pressures that this will come.
Coming up. All right, so last podcast, we talked a lot about the AI race, and it's continues to be, grow at a very steady pace. So I was hoping you could give us an update as well of what you're seeing in the markets in terms of AI, who are the winners, who are the leaders, who are the losers so far, and are there any updates in AI in general? Are we seeing any signs of slowdown over there?
Before touching upon AI, we forgot to mention Bitcoin. We know that publicly, July this year, Trump had stated that he wants America to be the capital of cryptocurrencies. Again, as expected, on the day, we've seen a massive rally in Bitcoin, record high this morning. And we've seen companies such as Coinbase, which on the day was up 13%. We continue to see positive momentum to date. So even today, we are expecting to see a very strong performance from Coinbase. So this is, again, to go back to your question about how Trump and his promises have impacted specific markets and more specifically specific names, okay? And so all in all, if obviously we continue to see this positive momentum across the board on these specific sectors, as Alex correctly pointed out, one should sit down, go through his portfolio and start shifting into these sectors that should stand to benefit under Trump's administration. To answer your question on AI, again,
just a note on Bitcoin. I mean, I think it's good, personally, my personal opinion. I mean, I think it's good to have a slight exposure to Bitcoin. There are physically backed ETFs like BTCE, where you can gain where Europeans can get exposure to an asset-backed ETF, because as our viewers may know, to access US ETFs, you need to be a professional client, since they're not UCITS ETFs. But there are options out there to get a Bitcoin ETF that is physically backed. I just wanted to mention that.
One observation is that Elon Musk's collaboration with Trump on establishing a Department of Efficiencies creates opportunities for AI, actually.
Which is called Dodge at the end of the day.
So those companies which offer data-driven products are bound to gain. And the identification of those companies in a portfolio, I think, would be essential. Palantir Technologies is one of the companies that come to mind and stands to gain quite a lot.
Because also he's going to educate the government or act as a consultant, the way I see it, about these technologies. So I think, even both parties were saying that they think that the Federal Reserve should, have Bitcoin as part of their reserve. So, I mean, both were pro, but I think with Elon Musk and Trump, or with Elon Musk advising the administration and getting all those efficiencies, I think it's going to accelerate possibly the adoption of cryptocurrency. The US is still moving forward on regulation. They're still not as advanced as Europe. In Europe, we have MiCA coming up, and it's going to be harmonized, and there's going to be also investor protection of it there. On the US, they're still getting there. So maybe that will be accelerated now with the
this morning I already read an article about Bitcoin and crypto, and whether it would be a partial solution to US national debt. So we are going to see quite a bit of developments on that front. But the official endorsement of crypto is there to stay. Nothing wrong. I was quite hesitant earlier years on crypto, but now I see various jurisdictions adopting it. And when you're talking about the US now adopting it, maybe a small percentage of one's exposure and portfolio to crypto, or else ETFs which follow physical crypto, which follow physical cryptocurrencies, maybe in order.
I think a point, if I may add, on AI, I think a very important point to mention. So we need to understand that you've mentioned Palantir, you've mentioned these are all basically private companies which are gaining business from governmental contracts. So that's very important to point out. But most important, it's very important also to point out specifically on AI that as opposed to years ago where companies, semiconductor companies, eventually NVIDIA today, they were producing for crypto miners or other more retail sensitive investors. So that would obviously create volatility in terms of demand for the semiconductors business. Today, we are seeing demand more coming from an enterprise value, from enterprise value in terms of stickiness of companies such as Microsoft, such as Meta, which are heavily investing in AI. And this is where we need to look at the sector as less volatile than it was 10 years ago, because there is constant demand. So I think there we've seen high valuations with NVIDIA all-time high, TSMC, Taiwan Semiconductors, I know we've mentioned it last time, it touched it all-time highs also. We need now to identify specific companies which or are directly involved, or they are indirectly and they are heavily spending on AI. We will mention a couple of examples eventually also throughout this chat.
Hopefully Microsoft will start being reflected more in the share price. I mean, it hasn't It hasn't done badly, obviously. It's growing slowly, but I mean, as you mentioned, it was because they were doing a big investment.
Yes, it was, again, we had Q3 results, Microsoft beat on all fronts in terms of revenues, in terms of APS and everything. But because they slightly over-exceeded expectations in terms of CAPEX, specifically, again, it was mentioned AI, the share price was down 6% on the day. And this is where, we've mentioned this last time, we need obviously to take these pullbacks as an opportunity to build an exposure or to add on current existing exposures.
Because I mean, since the last podcast, I mean, we're still talking of whether AI is here to stay, if it's just a fad, if it is something that will die. I mean, the adoption of Microsoft Copilot has continued to grow. Now they're using it in software development. I was at a conference recently, and you see how it's become almost the norm now. So I think also there are competitors to ChatGPT and Microsoft AI. There's obviously Elon Musk is competing with the Grok. So I think it's not anymore a question now of whether AI is here to stay or not. It's just a question of how much can it grow. I think the use case is there. It's a bit different to crypto. Crypto, we're still trying to prove the use case that it can actually, what can crypto be used for? As a currency, okay, as a whole storage of value, but, you know, and it's already being used for cross-border payments, but there's, you know, it's still more, we need to see where it's going to end up. But although it's definitely here to stay as well. But on AI, it's already very well defined.
Tangible.
It's more tangible, and it's not showing any signs of slowdown. I mean, do you think that Nvidia can keep up this the market with the market expectations?
I think eventually we'll see a plateau in terms of share price, because obviously market, as we are very much aware, are forward-looking. But in line also with what we've discussed in terms of Trump's policies, etc., a very important policy apart from immigration is eventually the expected corporate tax cuts. So Trump is proposing a tax cut from 21% to 15%. This will obviously eventually improve companies' margins. Okay, so
corporate tax,
yes, specifically corporate tax from 21 to 15. This will eventually obviously improve margins in terms of how that heavy capital expenditure on AI will be reflected into a company's bottom line, being it for the mega caps, being it for all those companies which have invested heavily in AI. As I've said, we need to look at the ecosystem of AI. We've mentioned last time, let's look at AI like looking at cake with different layers, with all those involved, being it from utilities up to the end user, okay? The demand will remain for sure stable. The question is the pace of growth. And this is where I question the continuing gains in companies such as Nvidia in terms of share price. So I'm not saying that it will not grow. It is the pace of growth. So we're seeing companies growing at 15, 20, 30%. It's not eventually sustainable. But obviously, it is there to stay. Okay.
And the next earnings for Nvidia, do you know when they are?
In the coming months.
In the coming months.
1.5 months from now.
Okay, so let's talk about currencies. There's a lot of money flowing into US stocks at the moment. But there's a new administration in, so I think it's worth talking about the euro-dollar and, you know, if it's a good time to be going into dollar at the moment, what's the outlook?
Well, the reaction for the dollar has been immediate, almost immediate, from 1.10, 1.11 level to the 1.05, 1.06 overnight. So that has had a big impact. And the strength of the dollar has to be seen also, and the effect of the strength of the dollar has to be seen also in what the Trump administration's plans vis-a-vis, for example, tariffs on China. There is a link between the two. There's definitely a link. and a sector or companies which have exposure to China, which have large sales turnover over there, like Apple, for example, are bound to be impacted. It's still very hazy that tariffs will be done, especially on electric cars and whatnot. But I think the bottom line is that regardless where interest rates are heading or where the economy is heading, the investors may want to own companies that offer some certainty in terms of cash flow, in terms of company fundamentals. And there are other areas. A company that comes to mind is, for example, GSK. Good pipeline of drugs, very wide moat, strong dividend. British American Tobacco is another one, in spite of everything, still goes strong. So apart from AI, which intrinsically has to form an integral part of one's portfolio, carefully selected companies without any extravagant PE ratios and what's not, you go for the fundamentals, good cash flow and good fundamentals for the company. So it is important, I think.
Jordan, euro-dollar?
Euro-dollar, as apart from the euro-dollar, we've seen an impact also with other cross currencies which might be impacted under this new administration. For example, the Mexican peso. Yeah. We know that, again, Trump's top of the agenda is immigration. I've mentioned this earlier, specifically deportation. And this is where it gets, more tricky in terms of investing in companies which have exposures, FX exposures, for example, in Mexico for the specific case. Again, to answer your question whether it is the right time to buy, I think it's all about the opportunity cost, where we think the euro moving in the coming days. So if we think that the specific stocks that we invest in will
far outweigh
outperformance. So if we can select a good name, fundamentally sane, that can give us easily a 10%, 15%, and we've seen these moves, fortunately or unfortunately, in an equity, while the currency will move 2 to 3% up. We're still net beneficiaries. So it is very tricky, but again, I don't think we are in a situation where we should not invest in the US market just to, not getting an FX risk.
Okay. You mentioned China. There's Alibaba there. The Chinese market has been taking more measures to help the economy. What's the updates on China, especially now given the recent changes?
The stimulus packages that are constantly being done by the Chinese authorities to stimulate consumption, mostly in China, have been given some lukewarm reception. Today happens to be a day when there's going to be the equivalent of Black Friday in China. Why is it important for companies like Alibaba, as you mentioned? Because it will gauge the consumer's appetite to spend, right? The stimulus packages are designed to put money in people's pockets. Now, money in people's pockets are all right, but are they willing to spend it? And this is going to be a very important gauge today, and we'll know by tomorrow, day after tomorrow, what would be the result of this Black Friday. We're talking about expenditure here of around 140 billion, out of which a good slice of it would be in Alibaba's hands. So but generally, everybody agrees that there are many undervalued situations in China. But the geopolitical situation, the tariffs that are proposed by the Trump administration, are bound to have an effect on the particular companies, JD.com, Alibaba, these Tencent. These are extremely good companies, no doubt about it. It seems that the Chinese administration has eased a little bit from the pressures that it was putting on Chinese companies. They have a situation where they
agree.
will not let a company be be stronger than the government. Let's put it that way. And Alibaba has paid the price for this when the chairman overdid it in his criticism. It's still a very good company. They are investing in AI as well. And cloud computing and whatnot. It's a massive company, but obviously it is held back by geopolitical tensions. We'll see in the next few days whether the stimulus packages is having a good effect on the Chinese people.
Hopefully it can recover some more. I still see it struggling, the share price to recover. We're still far away from
following paces of stimulus which were literally ineffective towards the market. The stimulus that the Chinese government has put in place a month ago, or 2 months ago, I think now, has pushed these companies, which you've mentioned, Alex, towards two remarkable gains. So we had Alibaba, Tencent up 55%. So we're not seeing Alibaba today at the 75 levels. At least we're playing around the 100 levels. And that was obviously a remarkable increase. There was a slight setback because of what happened in terms of election outcome. As you've said, these are still solid names with a very good business model. The problem is now, going forward, the possible tariffs and the unpredictability of the Chinese government, which basically is political risk premium that an investor has to pay for.
Fair enough. Bond markets. What's the update over there? How did they react to we talked about the stock markets and the latest trends in the sectorial. What about bond markets and also the fact that Trump, although the Fed is independent, the Trump administration sees cutting interest rates as part of the solution to inflation?
This is very interesting because apart from, I think, Trump's agenda is inflationary. In fact, we've seen immediately a strong negative reaction in the bond market. We've seen yields moving higher, that is equivalent to lower prices, right? On the back, as I've said, of this inflationary agenda. So being at a situation of tax cuts, okay, which will obviously leave, as Alex also pointed out with the example of China, more disposable income, which eventually needs to be spent, or hopefully will be spent. And this is where we have a contrast to what the Fed wants to eventually do, cutting rates. We had the latest rate cut last week, in total 75 basis points of rate cut, in conjunction with, as I've said, an inflationary agenda. So we can get to a situation where inflation will not move lower in line with the Federal Reserve's expectations. We know what Trump did in his previous administration. Jerome Powell was also the chairman at the time. Huge pressure, okay, for rate cuts. I remember a very interesting data point was that Twitter at the time recorded 100 tweets by Trump targeting the Fed. Okay, so this is the sort of pressure that possibly we will obviously re-experience this time around. Again, in fact, Powell last week was directly asked the question if he would resign if he was asked to do so by Trump.
Will not.
He will not. So this is a situation of an independent body which its main aim is price stability and maximum employment. But then you have a new administration coming in, which is very inflationary.
But the effect on the market, so lower interest rates, stocks tend to do a bit better when interest rates are lower, right?
Unless we would expect huge inflationary pressures re-emerging.
What about the bonds? So the people who have existing bonds, shouldn't they see the price go up because they locked in better rates than new issues on the market right now?
Yes, obviously we saw rate cuts, so that was very positive for the bond market, right? The problem is, again, the market tries to anticipate. If we will get to a situation with Trump's policies, we'll start seeing again inflation picking up. We risk the possibility of the Federal Reserve or not cutting further interest rates, okay, or eventually increasing rates. So, for example, the central bank in Brazil had no other option but to raise rates. Why? Because inflation was picking up at a very fast pace. So it is a very delicate situation which creates volatility, but it also creates opportunities. Why? Because if I logged 6% in October last year when rates were at their peak, today the same companies are issuing at 4.5%. If at least rates remain stable, we can still lock the 4.5% as opposed to 2021 where the same companies were issuing at 2 or 1.5%. So for both the bond market and for bond investors, I think it is a delicate situation, but with good opportunities also there.
In fact, you can see it in the 10-year treasuries. The 10-year treasuries have moved up in quite a substantial way. And also, let's say, 10-year bond issues have gone down in anticipation of this uncertainty about the inflationary aspects of Trump's policies. So we're going to have a very tight line between what Trump wants to do and whether those inflationary pressures will actually materialize, which would delay the Fed reducing interest rates, which the market would react to, definitely. There's already an element of that because what was the least 10-year treasury was down to, 4%, 3.8?
Below 3.8.
Now it's 4.3, 4.4.
4.3 this morning.
4.3 this morning. So the effect is over there. It shows the uncertainty. But obviously we're talking about potential and the future. We'll see how it pans out.
I think very important to point out also, and this might be actually a silver lining, are the possible ease in geopolitical tensions. I think, coincidentally following the result, I was listening to a BBC podcast where they interviewed a very close friend of Donald Trump. And throughout the conversation with Trump, he said that he intends to actually get Ukraine and Russia to the table to discuss and possibly thresh the geopolitical tensions. That is beneficial not only globally, but especially for Europe. We know that Europe was impacted strongly with the gas prices, with wheat, with where prices had spiked. So I think that's a very important aspect that is, as I've said, the silver lining, and I hope it will happen. Personally, I think if Trump was in office, in 2022, this conflict wouldn't be with us.
Yes. And mentioning Europe and Jordan as well, we've got now a situation with the German economy struggling, with the German political scenario complicated. The coalition government is not working well, possibly March elections. And yesterday, there was an official announcement by the EU saying that Germany is too important for the continuation of the EU, and that stability in Germany means stability in the rest of Europe. But there are many aspects to this. When you see companies like Volkswagen struggling, it's in the auto sector, but it's very important for the German economy. 30,000 workers being laid off, 10% cut in wages. These are not good signs for the strongest, what was supposed to be the strongest economy in Europe. So that is going to have an effect.
Okay, so moving on, but remaining on the bond side, local issues, I thought it would be good to give an update as well on what we're seeing in the local market.
Yes.
In terms of bond issuance.
Yeah, there are two local issues, Healy and the TUM Invest, the TUM Finance, excuse me. One more time, it shows the appetite of the Maltese investors for local issues. With Healy, it was an unsecured bond, but still the name attracted a lot of investors, and it was over and done with within a few days. Again, repetition with TUM, a couple of days. Admittedly, it was not a large issue. We're talking about a 12 million issue, which is not considered a large issue. But again, it shows the appetite of the Maltese investors and confidence in local companies. these companies have a relatively strong balance sheet. So really, and also one aspect that I've seen happening is that in the last years, 2-3 years, the higher coupon bonds, those that were issued, let's say 5%, 4.8, 5.2, and even more, are obviously more liquid than the lower coupon bonds. So we've seen a good direction on the local bond market with regards to volume. Admittedly, obviously attracted by the relatively high interest rates, which are not attainable in European bonds. So that is, I would say, a positive way forward of having the liquidity in the local bond market, two-way traffic, buying, selling, which is quite evident. But one more time, we are anticipating some more issues, some more big issues coming along, which will be interesting. We've had also the Bank of Valletta issue, which again was overwhelmingly supported, and within 3 days, the issuer had to close it out. 170 million collected for 100 million offered, even though it had a particular complexity in that all bank bonds now have a clause, a covenant that says that the bank, in extreme circumstances, can convert that bond into ordinary shares. But still, there was an overwhelming support. This has happened in practically all the issues that we've had over the past years. Oversubscription, or else the issuer closes the issue well before because of demand.
So the healthy bond markets with a strong pipeline for next year, so it's looking good. Okay, so we've arrived to the end, so I want to sort of close it off with an open-ended question on what are your expectations for 2025, if there's any sectors or specific stocks that you think will shine in 2025.
I think 2025, given what we've discussed in terms of policies, it will be a volatile year, but as I've said earlier, it will create also numerous opportunities. So we've seen many sectors which have performed well on the election result, and from a positioning point of view, it's all about aligning to what also Alex said in his introductory part, aligning to which sectors can benefit. So we are positioning our portfolios with the core holdings, take opportunities of the dips in the mega caps, also being Meta, being it Microsoft, Alphabet, and Amazon, which we forgot to mention had very, very good results, okay? But then you have these small companies which you need to, small companies relatively obviously, which we need to identify. For example, we have opened position in Salesforce. We have opened the position in ADN. These were positions that we opened on dips. Mercato Libre last week had its results. The equity was down 16%. Okay, Mercato Libre is equivalent to Amazon, but it targets its market is the Latin, right? Latin market. These are all opportunities that one needs to obviously align. We've mentioned financials, again, which tend to benefit non-banks, but also banks will do well under this administration.
European banks, once we're mentioning banks.
European banks did very well over the course of the past 2 years in terms of net interest income. Now it is all about whether they will sustain the interest income levels, which is very difficult to sustain because the rates are moving lower. So it then boils down to growth or lower growth in non-performing loans.
Because US banks rallied in the JP deregulation and so on. But European banks are a bit under, the stock prices are somewhat under pressure.
European banks were always more stringent under the regulatory regime of the European Banking Authority. In fact, in terms of capitalization, ironically, they are stronger than US banks.
Yeah.
So there it's a difficult one. We had a very good rally with banks rallied 60-70% over the past year and a half. We did well, we trimmed from our profits. And obviously, we'll keep hold on to a neutral position in European banks, being it BNP, being it Crédit Agricole, and other banks which will continue to well. So a closing remark from my end is obviously, again, as I said, positioning with the core and then identify these opportunities. Interestingly enough, many people are very concerned about volatility in equities. Ironically, over the course of 10 years, it is statistically proven that 94% of the cases over a 10-year period, one tended to gain if he was exposed to the equity market. So cash is safe in the short term, but it is riskier in the long term. Equities are riskier possibly in the short term, but less riskier, and as I've said, in 94% of the cases, equities did here over the longer term. So let's expose also ourselves to equities, probably also possibly through a balanced portfolio.
Yeah. I take a little snippet from what you said about trimming the holdings. I think it's very important. Sometimes we are afraid to sell because we believe in the company, and it's always long-term value that comes in. We are not traders. We simply invest in value. But trimming profits or taking the original sum out or leaving the original sum out and taking the profits and going on to another investment which carries equal opportunity, I think it's important. First of all, you don't let any particular item in your portfolio which surpasses more than a certain percent, more than 5% of your total investable assets. I've had situations for Apple, for example, the appreciation was so big that it distorted the portfolio level. So what do? You trim it and invest that money into something else. There are so many opportunities, taking a leaf out of what you said, taking advantage of the dips. And today dips are not 1% or 2%, but overnight it's 15% down, as was the case of Mercado Libre. And that is an opportunity. ASML comes into my thoughts as well as an opportunity. The likes of Caterpillar, Halliburton, all opportunities which, if you do your research right, will offer you the growth that promises to be good.
Apple has slowed down, still not doing as great as some other better performers, right? What are you seeing in Apple?
I think they're lagging in terms of innovation when compared to what other companies are doing.
They're still.
And
because last time in the podcast, in fact, we said, let's see what they're going to come up with, but it hasn't been groundbreaking. And as Apple Intelligence was a beta, they launched it, but it's still really not launched.
It's reflected in their share price. So when compared to other companies, they're lagging. So again, it's a very difficult situation. Apple did very well over the course of the past 20-25 years. But again, given the less innovative push by the company through new products, etc., I think there are better opportunities elsewhere.
The upside seems limited unless, I think, and I think the market is showing that, right?
Yes.
It seems limited,
the
upside compared to what it was before when they were innovating at a faster pace.
Case in point, Warren Buffett has trimmed from his exposure to Apple. So I think it's a good example of confirmation and indicator that obviously they have lagged and there are opportunities as well.
So thank you very much. For our viewers, keep on sending us feedback if you'd like us to discuss any topics. This is our third pilot now. We've changed also venue for those that might have noticed. I also want to put in the proviso that this is not investment advice. We're here to discuss the markets, to create interest. So you'll be seeing that disclaimer coming up. But at the same time, we like to bring our clients and potential clients the latest on the markets. With Kalamata Cuschieri and Moneybase, you can do it yourself if you are an experienced or knowledgeable investor, or else you can also go through one of our financial advisors across 4 branches, and you can also have a discretionary portfolio, so you have the full options available to you. Thank you very much, and see you next time.